Welcome to the Decent People Podcast, a production of Decential Media, where we're committed to telling the stories of the founders, builders, and visionaries who are creating a new decentralized economy and internet experience. You guys know it as Web3 or blockchain, and we're going to bring you the smartest and most interesting people in the space for intimate conversations that reveal their background, how they got into crypto in the first place, and what they're doing today to make a decentralized future a reality. Thanks so much for joining us. Make sure to check out our site at decentral.io. Now, to the show. Hi, and welcome to the latest episode of the Decent People Podcast. I'm your host, Matt Leising, and today I'm joined by Scott Lewis, who is the co-founder of Defi Pulse, and someone I've been following on Twitter for a long time and have very much admired for his reasoned and sort of well thought out takes on whatever the issue of the day is, which if you follow Twitter, you know is really not the norm. Hey, Scott, how you doing?
Hey, Matt, I'm doing pretty good. Thanks for having me on.
Yeah, thank you for being here. Speaking of Twitter, I noticed, I think one thing that kind of blew both of our minds was when Tom Brady was kind of tweeting at Vitalik Buterin, the co-founder of Ethereum, who Vitalik, I guess, had said that he didn't know who Tom Brady was. It was part of like a Time magazine interview. And so Tom Brady tweets it, like retweets it and says, "Hey, Vitalik, how's it going? I'd love to meet you someday. I'm a huge fan." And he called him a GOAT. So I think anytime the most winning NFL quarterback in history calls you a GOAT, you got to take that.
Yeah.
But it's one of those weird things that just happen on a given day on crypto Twitter.
Yeah, I thought it was pretty cool because it's sort of like, I mean, Vitalik's like a genius and he's not like the most like typical guy in the world. And so it's sort of like the prom king being like, hey, that guy's all right. Like he's not just all right, he's awesome. Like, shut up. So I don't know, it was just sort of like a fun moment in grown-up land.
Yeah, it totally exists. I totally agree. It's been interesting to see like the world catching on to Vitalik a little bit, I guess, over the last little while. Like I've known him for about 5 years or so. And obviously once you get to know him or interact with him, you realize just, how amazing he is in a lot of different ways. And now it's just so, and then that, but then like now the larger world seems to slowly be catching up to him. So it's kind of fascinating time.
Yeah, he's really like a counter on like sort of like the way a lot of people become famous, like sort of like in the Donald Trump model of like saying outrageous things and getting attention for it and creating polarization. He's sort of like the very counter, like the counter trend to that. And I think a lot of people find that refreshing and kind of the way he communicates in like a reasonableness first kind of way.
Yeah, for sure. So I read that you grew up in Nashville, Tennessee.
I did.
Were you?
I did.
And I also read that you were a commodities trader. Were you? Did you grow up among like cotton traders and stuff like that down there?
No. No. I went to school in Chicago. And played a bunch of poker while I was in school, and then after school went down to the floor of the Chicago Board Options Exchange.
Okay.
For a few years.
All right.
I was actually trading options, but didn't trade commodities till a little bit later.
Okay. Cool.
Well,
yeah. let's go back a little bit. What was it like to grow up in Nashville?
I don't know. I mean, I liked it. I was a kid, so you didn't really get that much exposure to like the culture that Nashville has now become very famous for. But I know.
What did you like to do as a kid? Were you good in school? Were you playing sports?
I was good at math, but I don't think I'd be described as being that great in school. I think my parents would have preferred I studied a little bit harder, but sort of, I don't know. I guess I did all right enough to like, I don't know, go to college and stuff. So that was fun. But yeah, I don't know. I think I had a pretty typical childhood. I think one thing that really affected me was I went to kind of like all like my family, so my whole family are from the north. Kind of moved down here like when I was like right before kindergarten. But I went to kind of like a prep school that was like all boys school, that had like a deeply rooted tradition, um, going back to around the Civil War.
Uh-huh.
And so I think that really sort of like it really affected kind of like how I viewed the world, in that like it sort of didn't seem all that fair. Um, and so I think that sort of like I didn't really know that much, I guess, about a lot of stuff then, but it sort of like affected kind of like, hey, like maybe if the same families that are still doing really well that were doing well in like 1870 are still doing really well in Nashville today, maybe that's not like a way we want to build a society and economy for the long haul.
Yeah, that's interesting. So yeah, and I would assume that going forward, that, like you said, kind of informed like the way you viewed the world, and probably one of the things that would make kind of Web3 or Ethereum sort of an interesting proposition.
Yeah, I think so. I think there's a lot of like maybe if you get out of like the American like social, political, economic like situation and you look more globally, um, and you start to realize like how many advantages like people in like a well-governed liberal democracy with like good rule of law have when you're like forming businesses, getting bank accounts, um, visiting other countries, immigrating to other countries, and you start to think of like, hey, like are all these structures that have always been with us like really the most just way for the world to exist?
Yeah.
Um, and I think if you look at sort of like how blockchains sort of like just are like oblivious to national borders and kind of like everything that happens on them, it's more like about going out of your way to comply with the existing structures, which is good-ish. But it's sort of like the default case is we don't have those same sort of like hierarchical structures, right? And they have to be like forcefully added back in, like they aren't the default case. But I think in like the more traditional economy, they are the default case. I think that's a big difference.
Yeah, that's a interesting part about this whole like experiment, and it's more than an experiment to me now, but it is true that people are kind of choosing what they want to sort of bring in from the traditional world, and sort of remaking it as needed, right? Like, because there isn't really, there's no guardrails, there's no nothing. So a lot of people like you who are building these things like have to make choices about, okay, what kind of structures do we want in this sort of wide open new space?
Yeah, and it's like if we form an organization in like a traditional economy or Web 2.0 sort of mindset, like my claim to the economic value accrual that happens with my partners or the people I'm collaborating with, right? That all has to be enforced by a court system where I could sue someone if they drink my milkshake. But if you're talking about tokenized projects, where sort of this idea that that the claim on value accrual should be designed in a way that it's not guaranteed by a threat of lawsuit later. It lets you collaborate with a much wider group of people without needing to be able to sue them later to ensure that you get the accrual of your work.
Yeah, it's a great kind of radical way of incentivizing people. That's one of the things that really appeals to me.
Yeah.
But back to Nashville, what was your favorite summer job?
None of them. I mean,
what was the worst summer job you had? Let me ask it that way.
Well, I would say the one I remember most fondly. I worked in a donut shop, basically every Sunday morning for almost all of high school.
Wow.
And so that's sort of like what I always think about as my high school job. And like a lot of memories, a lot of like just.
That's an early shift, right?
Yeah, 6 a.m. Sunday morning.
Yeah.
Pretty early Sunday.
Yeah.
But
did you get your fill of donuts, or do you still love them?
About the third or fourth week you work there, you realize you don't want any more donuts.
Yeah. I delivered Domino's pizza in college, and I still have a really hard time ever eating Domino's. It's just the smell of it brings me back to like remembering how it was actually made in the kitchen and stuff. So
Yeah, yeah. I mean, not even that. It's just like, you only so much of that taste you can have, and then you're like, okay, that's
yeah,
good enough.
yeah.
But
So you ended up in Chicago in college, and that was how you sort of got introduced to the trading culture. Kind of that's been part of Chicago forever.
yeah, yeah. One of the one of the trading firms had a one of the Susquehanna International Group. They had a pretty big presence at that time on like the floors in Chicago, and yeah, I just got an internship on the floor, and then came back full time
Yeah.
when I graduated. And
Is that where being good at math came in? Like, especially with options, was that something you could do in your head and sort of like stay ahead of people?
yeah, that, and they also like really at that time, um, which is like mid 2000s, they were very interested in hiring like poker players and gambler types. I think now like they've transitioned to more like super geniuses from MIT.
Yeah.
But at that time, Northwestern was still within the schools they recruited from, um, and so I was able to get a job.
So were you actually like playing poker tournaments or something? Is that how they found you? Or
Oh no, no, I was that was like no, they didn't find me. I found them. But that was like the golden age of online poker.
yeah, okay.
Um, back before
What's your
Cutting
favorite
Edge.
poker game?
I don't know. I really burnt out about a decade ago, but
Yeah,
probably just regular Hold'em.
right on. Um, and so what was it like being down on the floor of the CBOE?
It was interesting. Um, it was like a weird time of like transition because there were like a lot of the old school traders there, but everyone had computers. And
Yeah,
so things were like rapidly getting much more quantitative and mathy. And so it was sort of like, I mean, eventually, like, it wasn't that far after the floors like started getting shut down completely. And people was just like, well, why are we on the floors? No, we're all just trading on our computers in the trading pits. Um, but yeah, it was good because you got a chance to talk to the other market participants in a way that doesn't really happen when you're just all trading on computers. And so you sort of like, I don't know, there's a little bit more like intimate of like a competition
yeah,
that
there's a lot of
makes
information,
trading.
right? Like who's talking to who, or who looks like they're nervous or whatever, or like
Yeah, and also just like how people think about like what business they're in, um, which is like actually, I don't know, I found it to be like a pretty diverse like set of ideas about like what we're down there doing and like how you're making money.
yeah.
Um,
Were you trading for yourself or were you working for Susquehanna?
yeah, that was trading for Susquehanna. Um, it's hard to make a lot of money working for them. But yeah, just like one of their one of their traders.
Right on. And what year are we talking about here, roughly?
I think I was clerk. I graduated 05, so I was like assistant trader or clerk for like 9 months, and then about after a year, I got on a badge, and then I was just 2006 trading, and then
So were you down there for the financial crisis?
uh no, because early 2008 I moved upstairs to their like commodity desk. We
Uh-huh.
focus on like volatility arbitrage and some market making, and so I was actually on like the fixed income commodities desk when the shit hit the fan.
So, but you went through the financial crisis during that job?
Oh yeah,
Yeah. What
yeah.
was that like?
Uh, the markets, it was like weird. The markets were like so messed up and wide. It was like every trade made tons of money, but um all of the firms like medium and longer term positions were getting just, I don't know if I can say that. 2008 was not a good year for most trading firms. Let's put it that. And then also people were like, there was this weird dissonance or divergence between the people that were like really on the insides of the financial system, were like worried about the future of a developed economy coming out of it. And then people on the streets were like, why are we doing this bailout? We don't want to give these bankers money. And it's like, they're literally like, the bankers themselves are worried if like the financial system will exist in 4 months.
Yeah.
And so it's just like this like crazy thing. Like everyone at work is just like, and then like everyone at home's like, oh yeah, the market was down a lot, wasn't it?
Yeah.
And it's like, that's only the beginning of the problems.
Oh, have you seen the stock market, honey?
So yeah, and so it's like,
yeah, that reminds me also at that same time, people were like, why are we bailing out the automotive industry in this country? And it's like, are you crazy? You don't want to lose that manufacturing like capability. That's like a wartime
like,
sort of necessity if it comes down to it.
Do you want to cook your meals by fire? Like, like I don't know. Sometimes it feels like people, just because things have been like the way they are for a while, people sort of like think that's the only way stuff can be.
Yeah. Did that, going through that crisis, like touch upon the way you felt at your private school in Nashville, where it's like sort of like did it touch on those same sort of themes for you at all, about like kind of the structures of power, or like who keeps being okay and who doesn't?
I don't know. I think it really impressed upon me that like kind of like that no one knows what they're doing really, because it's like everyone that was like supposedly experts, all this stuff, it's like for all like the last like I don't know 2-3 years before the crisis, it was like the really smart people, they could do math and like that really like understand how to price things, like they knew all this stuff was priced wrong. And then like you have all like just like the money in the system being like pumped into things based on what banks say they're worth, even when the banks are saying they're worth not what they're worth. And it's just like the incentives in a financial system do drive people's behavior. And there's not like always that someone that's like overlooking the entire thing to make sure things aren't going to go completely wrong.
Yeah, I just did one of these podcasts with Chris Giancarlo, who was before he was chairman at the CFTC, he was at this trading firm called GFI. It's like an interdealer broker. They were really big in the credit default swap market. And a couple of days before the crisis, he told me the story that he got a call from somebody at the New York Fed, and they were like, kind of like, hi, what do you guys do? And Chris is like, oh, we put buyers and sellers together in like the credit default swap market in a private, marketplace, and blah, blah, blah. And the Fed guy was like, well, can you, like, what do those markets look like right now? And it's like, literally, like he said, is like 3 days before Lehman went bankrupt. This is the New York Fed. They are the primary banking regulator, like they should know what's going on at Morgan Stanley and at Goldman Sachs and at Lehman Brothers. That's their job. And so, yeah, just like that idea that you said about like nobody really knows what they're doing. That definitely, I remember that feeling too back then. And I've felt that feeling for the last 3 years, probably.
Yeah. And like if you think about like, it's actually kind of like one of like my like biggest dreams for why decentralized finance sort of gives us a chance for like a more stable and productive financial system, is like all of that, like the sort of like the inflated values kept going for so much longer, and no one realized how big the problem was, because like there was no like market-wide transparency.
Yeah, the transparency was
down into these like cogs, and it's like they try to address like, it's sort of like generals building an army to win the last war, right? Like they addressed everything that caused like literally the last crisis, and like so many huge efforts to like force transparency like they needed it to have solved the last financial crisis. But like if you have to like if you have to try so hard to get insight into a closed system versus like having a transparent by default system for DeFi, it it feels like at scale, when all market participants can have like you know clear glass, like a fish tank view of all of these little like parts of the market, and
Yeah.
form like an informed opinion about the state. I think you end up at like a meta level with much more efficient markets than are possible in the like our best case DeFi marketplace is just much like more robust than our best case traditional finance
Yeah.
market.
And it's interesting in this world and like Web3 or DeFi. I think that when you do get into an area where there's a lack of transparency, like the code itself, I think that's where you get problems still, which is interesting. Obviously a lot of this stuff is open source, but who has the time to go check everybody else's code, right? And so the big kind of fuck ups you hear about are typically somebody, left a backdoor in some code, or they have a bug, and it's like that's where the issue is coming from, rather than like you're saying, because everything else is rather transparent and you can like track money and see what's what. And so but yeah, Wall Street has always thrived on a lack of transparency. That's how they make a lot of their money, because if nobody knows what the price is, then you get to tell them what the price is. So
Yeah, I would agree with that.
yeah, it's a great model if you can pull it off.
Yeah, I would. It's much easier to trade against uninformed customers if you're like a sell side desk.
So so crypto was just kind of being born around this time, out of the crisis. When did you first come across it?
Um, I first came across Bitcoin like pretty early, but it like what Bitcoin was in like 2012, 2013, like it was like kind of interesting, but like it wasn't something I really wanted to dig down in. Like it did just strike me as kind of like another commodity, like a weird commodity. And like I mean, like I've never really been one to go in on like some of like the Austrian ideas, or like some of like the hard money type stuff, and like, hey, we need a new gold standard sort of ideas that like drive people to think Bitcoin's going to solve a bunch of problems. And so it's sort of like, okay, that's cool. It's interesting it's gotten this far. Be fun to see where it goes. But it wasn't until like really I kind of fell down the Ethereum rabbit hole in like late 2016 that it's like, hey, this is like could be like foundational infrastructure for like a different way for the world to work.
Yeah. What was there a certain project that really grabbed your or just piqued your curiosity?
Well, actually, I actually didn't hear about Ethereum first. I heard about Augur, which, well, if they're doing stuff, I don't know about it. But at that time in late 2016, that kind of Augur prediction markets was kind of one of the high status projects in the space. But like, I just read like it was like just a random like blog post about how like there was like this prediction market that they thought they could build that would like be running like fully decentralized. And so like the idea that there was like something that could make that possible was like really interesting. And then I found out that like, oh, Ethereum was like the thing they were building on that could make that. And then I sort of like just like started reading.
Yeah.
And then about like,
I remember writing about Augur back then, because I think somebody put up a contract about whether Donald Trump would be assassinated before the election. So it got a lot of attention. Because as you know, when it's open source like that, anybody can put up anything they want.
Yeah, well, it feels like a big problem, but then they were like, okay, we're going to change the rules of like the Oracle. If it's an unethical market, it resolves unethical and not yes or no. And that's like, okay, we fixed it, you know, but it's like kind of those things like, someone maybe has to do it before like people are spurred to think about how to fix it. But yeah, I think sometimes like, yeah, like the runaway decentralized autonomous robot thing is sort of like, well, at the end of the day, it's all social consensus,
Yeah.
right? Like if everyone's like that Ethereum blockchain isn't the real Ethereum blockchain, and everyone agrees this other blockchain is Ethereum blockchain, the other blockchain is the Ethereum blockchain. Like it's like just like we all agree that like that person owns that house, right? Like the soil doesn't and the air doesn't know who owns it, right? It's just a social construction that that person owns it. And I think it's like, I think, yeah. I mean, I think like a lot of people can agree that like some really bad stuff is bad and then like change it.
Yeah. Were you still trading for Susquehanna as you were kind of falling down the rabbit hole?
No, I was by that time I was just like trading on my own.
Okay.
But yeah, because I was only working for Susquehanna for about 4 years total.
So what made you want to kind of jump all the way in and just go into crypto?
I think I just like started, it was like 4 or 6 weeks. I was just like, okay, I'm gonna do like 25% of my time trading crypto, 3/4 of my time trading like the normal stuff. And then like after the trial period, I was like, okay, let's cancel the Bloomberg subscription. This is worth more of my time. Like even though I definitely found the crypto stuff more interesting, it was also like, you know, better financially. So it's like, okay.
Yeah.
But at that time I wasn't really trying to build. I was just like, you know, I'm trying to be active and good contributor in the community or whatever, but mainly focus on just like speculation or, you know, trading perp swaps.
Yeah.
And then
Yeah. Of course.
doing SEOs.
And then I guess so was there something that kind of drew you out of that mentality into wanting to build stuff and sort of like get,
yeah, there was like, I was pretty active on like BitMEX. But I was also doing like, there were a lot of like founders new ICO projects that I was like really exciting, like their visions. And so I was contributing money to them. But then there were a lot of other projects that were like
just scams, right?
yeah, like not even like the things that were like just full out like, we're just gonna steal your money, we're sorry. But like the ones that were like, I don't know, just like
maybe half-baked.
like overblown shit they were never gonna ship. And it was like pretty clear like this is absurd, right? And so we started around me and my co-founder Ronnie, we just like we decided we're just going to do like a Wikipedia to talk like to where everyone that like kind of cared about like, hey, this is a scam because of this, or like this literally doesn't make sense and they're making that up, could like put all their stuff into one place.
Yeah.
And so like our very, very first MVP, we actually like literally forked the software that runs Wikipedia.
Oh, really?
Media. Yeah. And then the second one, like after we started that and some people were contributing, we moved to like, we built our own sort of like content.
So it was like a clearinghouse for ICO projects for people to just kind of check them out before investing.
Yeah. And like a lot of people like researching them at the time, but it was sort of like, it kind of like weighed on you. Like we were really excited about what we thought were like the higher quality projects, but then like, you know, you talk to your friends or like other people like on like Reddit, which was kind of like a really important community spot at the time. Like, you know, people were like also really excited about projects that were definitely not just going to take their money. And so it's sort of like sad because like these are kind of like your community members, but there wasn't like a good way to like organize that information. And so we just thought that would be like a good way to do it. It wasn't really a business. It's more just like sort of like a public service type thing.
And had you like, did you already know how to code, or when does the coding like come into this, or do you code?
Never.
No,
Never.
no, no,
No,
okay.
no, no. I mean, I'm
Sorry,
like,
I didn't mean to accuse you.
no, 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 no. Like, I'm like the world's like backward trading. I like write my own Python scripts and stuff, and like do some algorithmic like trading strategies. But like my code is like not what you'd want in a professional repository. So so like no, I don't code. I can kind of like read it and stuff, but like that's about
Yeah.
as far as I'll go.
So you're more the idea guy, the implementation guy, and then you've got some of your co-founders who are the coding people or whatever.
Yeah, I guess. I mean, like for DeFi Pulse, I was doing all the product stuff at the beginning. I also did all the like design work on that. But like at this point, I'd say like recruiting is like my core, like I don't know, recruiting like good people is like basically my real job at this point, I'd say.
And is that for the companies you're involved with or just across the board?
Yeah, recruiting people for them. Although I guess now I say that's my real job, but we started a little like support organization, and now we actually have some more recruiters. I guess I'm helping them out now. I'm not quite sure. I mean, recruiting recruiters, and now do I do the recruiting? But I mean, yeah, I mean, because like finding people is like, and finding like people that are going to do good work and be leaders and like take ownership of stuff is like really important for like scaling organizations.
Yeah. You've I was reading your Twitter feed and you've said a few things along those lines about like DAOs, about decentralized or autonomous organizations, and how difficult it is. And that's really the number one thing in a DAO, right? Is you got to have a community first. I think you can rally around, like, and then you get an idea and you all sort of try to work for that idea, but it's really difficult.
Yeah, I would say if you think about like it's not like they were like literally the first DAO, but like Yearn, the Yearn launch was like this first like this first experiment. It's sort of like the type of DAO, like the snapshot driven DAO and like internet form driven DAO. There was really like just like kind of like free flowing. And there's been a lot of different projects doing that.
Like the simplicity of Yearn, right? Is that you're earning interest on your crypto. Right?
Oh yeah. The product of Yearn is
that's very straightforward. And a lot of people want to get in on that, I think, right? So
yeah, well that was good, but like the way the actual organization, like especially before like they've iterated a lot on and like really developed what they're doing, but like that first month of like what is the Yearn DAO, like what is Yearn governance was just like complete chaos. And but yeah, like I think it'll be interesting. I don't think we've seen like the DAO format that just works yet.
Yeah, I agree. I think, yeah, if you have a already built community that you've already been working on for several years, and then you can like introduce this idea, there'll probably be enough of those people that might make it work. But yeah, there's a lot of challenges for sure. But I wanted to like ask about DeFi Pulse, and what that is for people who are listening is it's a metric that Scott has created where you look at something called total value locked. And that means how much cryptocurrency is basically in the treasury of whatever protocol you're talking about. And you actually invented that idea, like about total value locked, right? Can you talk a little bit about that?
Yeah, so sort of like the need, it wasn't like I have this idea, total value locked, let's make a site about it. It was more coming from like this problem in that like especially when like transaction costs are small, it's really cheap to like just make an address that sends transactions automatically, or make a ton of addresses that send transactions automatically to like create the impression of daily active users, right? And so if you're
Yeah.
looking at something like transaction counts or user counts, it's a very, very cheap metric to fake. And if we're living in sort of like a blockchain ecosystem where some of like the less ethical or less authentic projects don't mind uh, paying for good metrics if it raises their token valuations.
Yeah.
And sort of like we saw some like, especially like with EOS, there was some very there's a site that kind of ranked all the dApps by user counts, and there's some very suspicious bunching amongst user counts to get to the top of the at the top of the leaderboard.
Yeah.
And the leading game was this game called EOS Nights, and everyone talked about it. Like these user counts were proof that like EOS is like the real Ethereum killer. Being an Ethereum killer was like very much what everyone was trying to be at that point. And but the thing is, I don't think anyone that was talking about EOS Nights had ever played it, because it was a mobile game that wasn't available in any mobile app store. What you did is you went to the website and there was like a picture of a phone on the website. And so you're sitting at your desktop, maybe playing a picture on the phone. I actually couldn't get the game to work, but I don't think it was that important. But like the idea that like the next hit game was a mobile game running on a sim of a mobile phone in a desktop website was like the most ridiculous proposition in the world.
Yeah.
But like this was the game that was being cited by all of like your favorite crypto funds. There was proof that EOS was like winning, right? And it was sort of like we didn't make DeFi Pulse to like say anything about EOS, like it didn't even list EOS. But what I did want is wanted some metric that was like that was not free to fake, right? And so if you have if people have taken $1 million of stuff and put it in the protocol in your smart contracts, they're kind of like paying in two ways. Because first, there's like the opportunity cost to not use those assets to earn a return elsewhere. Like they're choosing to earn a return with the protocol, and then they're also taking smart contract risk. And so if you wanted, like, let's say you think the smart contract is like 1% per year, and maybe the opportunity cost is like 2% per year. I don't know, whatever numbers you want. That $1 million of TVL to fake is going to cost $30,000 a year.
Yeah.
And so if we're thinking about like how do we create ways of judging progress that are resistant to Sybil attacks, like most of the Web 2 metrics aren't really like that useful for that. And we still to this, I mean, you could watch people fake them, right, to create their narratives around like inauthentic narratives around like
Yeah.
perceived success.
It's interesting. There's a real theme of fairness, I think, through the projects that you've taken on, like the ICO, kind of like, you want to make sure everybody knows what's what. And then there's this metric that can be gamed here by daily average users, but so let's find a different one that's fair and almost or much harder to fake when you talk about total value locked.
Yeah.
And I was just wondering for listeners, if you could sort of, there's about 4 different categories, I guess, that you guys track on DeFi Pulse. I think it's interesting for people just to know, like, I think the term DeFi gets thrown around a lot, but could you just kind of like describe like what the different categories are, and just like a sentence or two, just so people can get a sense of like, this is what's happening in like Web3 DeFi stuff?
Yeah. So I think the if I'm thinking about like what is like the like the absolute core of decentralized finance, it's two things. It's decentralized exchange, right, which is like the
So
ability
peer
to
to peer, there's no intermediary, basically.
Yeah, like you're just like exchanging based on protocols. Like I deposit as an LP in Uniswap, you trade with my assets in Uniswap. It's done by protocol. There's no entity that could like go register as a broker deal with the SEC.
Mhm.
Just like on that bit of ridiculousness from our regulators asking protocols to register. But and then the second core piece is kind of like lending. And so lending, and we just like really it's like collateralized lending. Like I put down $2 million of ETH, and I borrow $1 million of stable, or I pull out $1 million of stable coin. Or I mean, that's kind of like the most common flow, but
Mhm.
you can kind of put down any collateral that they will give
Yeah,
you
and then
credit for. And
you
yeah,
would then maybe go buy something with those stable coins, right? So it's a kind of way of
yeah,
getting money to increase your investment opportunities.
yeah. And so and so like I'd say those two are like the core the core parts of like what's like at like the heart of DeFi. But I think now you're also seeing like uh like decentralized perpetual swaps as like derivatives kind of like doing pretty well. You know, DYDX doing some pretty good volume.
So perpetual swaps are when you get, can you explain that one? I've heard that
Yeah,
before, but I can't remember exactly what the metric is, or the mechanism.
yeah. So it's sort of like a derivative that never settles or settles continuously, or over short frequencies. Basically it's like, okay, let's say we did a perpetual swap on oil. If our reference price for oil was $100 and the perpetual swap was trading at $101, it would be mispriced by $1.
Yeah.
And so let's just pretend like the parameters were such that so when there was a 1% divergence between the reference price and the price the perp swap was trading is 1%. All of the people that demand to stay long pay 1% or $1 to all of the people that are short. And so if think of it sort of like there's the reference price moving, and then there's the perp swap price moving around that. And sort of like, if you're long, you probably don't actually want to pay a whole dollar just to be long the perp swap for that extra 24 hours. And so you're incentivized to sell. And so it's sort of like the more the perp swap gets away from the reference price, the more the rubber band like pulls sellers from the long to get it back down to price, or the rubber band like pulls it shorts to buy back so it gets back to the reference price.
Yeah.
And so it's sort of like this nifty thing that was there's sort of like I think it was invented by like crypto CeFi things, but like sort of became like the standard for how like rather than like the futures that you might see more in like a traditional financial market.
And so you've been doing DeFi Pulse for about 3 years now, or
Yeah.
how have you seen things change? I know we always talk about DeFi summer 2020, right? That was like a big splash. NFTs were kind of the next big thing to come out. Like, did NFTs take all the juice out, or like has DeFi just kind of continued to kind of slowly do cool stuff in the background, or where's the trajectory going in your opinion?
I mean, it definitely when NFTs came up, there were like some people that sort of tried to be like, NFTs or DeFi, who's gonna win? But it's sort of like the biggest challenge that like anyone that like the decentralization movement faces is, always has been and will be for a lot longer time, is like the total addressable market. Like how many people have like Web3 native wallets? How many people are comfortable doing like an on-chain transaction, whether that's mainnet or Polygon or on a roll-up or Avalanche or wherever, right? And as that's like, you know, when there's like 1,000 people that are doing on-chain transactions, right? There's only a limited number of dApps that will like be able to like exist, or protocols on the chain that will exist like in a feasible way for that small group of people. And like every time that like population of Ethereum natives or Web3 natives more broadly like 10x's, the amount of stuff that it makes sense to build for that group of people, like I don't know if it exactly 10x's, maybe it does, I don't know, but it's like getting more users is like, or getting more possible users is like the challenge. And it's sort of like, it's more like each thing that's doing well is like an extra oar on the boat, right? Like it's not like, it's like NFTs are helping DeFi much like.
Yeah.
Usually.
And this is another thing I think you've touched on Twitter is it's a great incentivized like mechanism inside of crypto, but it's also not a great way for devs to get paid, because you know isn't it a lot like a lot of times what they're creating, and correct me if I'm wrong, it's you're not really charging any money for it. You know, like I know there's obviously gas fees and stuff like that, but unless you have a coin attached to a project, like I think the economics are still a little tricky. Am I wrong about that?
Well, so I think that's a lot of it comes down to the protocol engineers that are actually building Ethereum itself versus the engineers that might work on like an NFT project or a DeFi project. And sort of like if you're building Ethereum protocol, like you sort of are making like whatever your grants say you'll make.
Yeah.
Like mainly from Ethereum Foundation, but not exclusively from Ethereum Foundation. And I think it's actually almost like a flip of that problem in that like the demand for like those sorts of engineers is so high across the market that like maybe some of like the rates that made sense in like 2016 are no longer the market rates. And sort of like in a sense like you know, Ethereum protocol development may have to pay more because Ethereum's been so successful.
Right? Yeah. And I guess that's a better way of like the lens of the Ethereum Foundation is interesting, because like how do they only had so much money to begin with, and then you know they spent it all, and it's like I think it's been a tricky situation, right? Like in terms of they can get grants and stuff, but like they're not really making any money, are they?
Well, they owned a lot of ETH, and that ETH went from $1 to like a lot more than $1, like 2,900 right now or something.
Yeah.
Well, I think it was looking scary in the big bear market when ETH got down to like 80 or $100. I don't think they're really capital constrained anymore.
Yeah.
But there was always this idea that the protocol engineers were both working for their grants, but also for social capital. And whether that was exactly the right policy or not, I would definitely say it was reasonable. But I think the one thing that's missing is just exactly how much more valuable those sorts of engineers has become over the last 5 years. And I think it's time to like reflect that.
What do you think is needed to sort of get more people, like you were saying, to become comfortable with a native wallet or to do on-chain transactions? Like what's if there's one or two things that you could have if you snapped your fingers, is it a matter of that, or what's going to help just like spread adoption, I guess?
Building cool stuff that people want to do. I mean, it's like I could only have time to do about like a fifth of like the on-chain things I'd like to right now, and just like the pace of like people coming up with like really original and creative ideas is like just mind-blowing versus like when I first started. And so like I mean it feels like it's coming. Like I don't know, there's just like, you know, every new cool thing that kind of like creates its own, like every new project gets a lot of their users from the existing community, but they also sort of like carve a bit outside that like existing community line. And I think just really that like process it's continuing to go is like
Yeah, I mean,
gotta
yeah,
work. I don't
I know
know.
like my son, he's 13 and he heard about Axie Infinity and wanted to figure it out. And like, so I was like,
Oh
yeah,
yeah.
that's great. Like, let's get you a wallet and I'll show you, like, well, this is your key and your seed phrase. And so, I mean,
No,
that's a
that's
pretty
funny.
cool way.
My little sister's boyfriend also plays Axie Infinity.
Yeah.
So yeah, it's kind of like cool.
Yeah, for sure. For sure. Well, hey, Scott, thank you so much. This has been really fascinating. Loved hearing about your story and about DeFi Pulse and where you think things are headed. It was great to see you.
Yeah, thanks, Matt. It was really good to talk with you, and yeah, thanks for having me on. It was fun.
Yeah. All right. We'll talk soon.